I am mining investor and editor of Resource Stock Digest. Head out of the Del Real here with my partner, Mr. Nick Hodge, who's also an investor and the publisher of Daily Profit Cycle. This is the 258th episode, a weird one at that, of our weekly therapy session that we like to call Investing in Bizarro World. A lot of weirdness going on all around. We're going to chat about it. We're going to talk markets. We're going to talk about how interesting is the word I'm going to use uranium bugs are. And you know, mind you, I'm a uranium bull, right? But man, y'all are some skittish people out there on the Twitterverse. We're going to get into what we're investing in, what we're looking at, and we're going to talk about Dow 40,000 and these bifurcated markets, man. It's an interesting world out there. Before we get into all of that, Nick, baseball spring training is back. I'm hoping my Cubs re-sign Cody Bellinger. That's our superstar center fielder / first baseman, gold glover, big slugger, hits for average. Great guy to build a franchise around. Hasn't happened yet, but fingers crossed there. How are you? How's the family? That's what I wanted to get to.
I was just telling you the days are getting longer, so we're excited for that. We get a bit of short days here in the Pacific Northwest in the winter time. So we've signed up for T-ball and all that good stuff. So yeah, baseball is definitely on the way. And other than that, just plugging away, man, itching for spring, I guess. It's that weird lull between, at least for me, you know, hunting season and fishing season and spring turkey season. So February is a time to put your head down and get stuff done. I was rapping to myself today. I've been in the lab with a pen and a pad trying to get these damn promos out. That's why I haven't shaved or anything. So anyway, I'm doing great. How are you guys?
Doing well. In the lab with the pen and the pad. I like the line. I like the reference. I recognize that I'm old enough to pick up a good Slim Shady Dre bar when I hear it. But no. Look, we're great. I'm coming off a week and a half, which is very rare for me, of either COVID or a nasty flu / cold. But coming out of that, thankful to come out of that. And look, the family's well. The wife was right there with me, sick alongside. She's coming out of it as well. So I'm hoping these 87-degree days and the sunshine helps it out, because I tell you what, it's been a weird week, man, especially today. So we record this on Thursday, February the 22nd. I woke up to what initially I thought was like my router down, right? And so I checked all the routers, everything seems fine. And then it turns out I thought maybe it was an AT&T outage. So I'm calling, that's not getting through, obviously. And then I find out it's like a US-wide outage, and it's all the major carriers. And I'm sitting here going, wait a minute, how can all the major carriers be out simultaneously? And it didn't take 20 minutes to get, service back and the towers functioning the way they were supposed to. It took, from early morning to late morning, early afternoon before, normal service was restored. Now, in the bigger scheme of things, it's probably healthy to be away from our phones for a good 4 or 5 or 6 hours, right? But the tinfoil hat person in me starts looking at that, and I start looking at Dow 40,000. I start looking at NVIDIA shares up some 16%. They're now up 265% year on year. And it's, that one stock is bigger than the entire economy of Japan. It's 3 times, I think, what it added in market cap.
Japan's like the 3rd or 4th biggest economy in the world. Mm-hmm.
You can't make this up, right? So again, I have this weird brain that connects things that probably shouldn't be connected, by a childish sense of humor to go along with it. But it feels eerie out there, man. I can't explain the Dow. I can't explain the broader indices, not with the macro backdrop where rates are where they're at, and we still have a Fed that, at least in speech, is pontificating, higher for longer. And then, all this other stuff starts happening, just not related. But in my mind, it's all some universal thing where like the weirdness is going to amplify. This is investing in Bizarro World. So it's appropriate to touch on. Any thoughts on your end? We talked a bit off air, so I kind of know what you're going to say, but I'd love to hear your thoughts in public anyhow.
I mean, it's been super bizarre out there. We've had this bifurcation in the market. We know about the wealth disparity. And there's some sort of transition going on. I'm struggling on deciding on how to put a finer point on it, but let me see what I can say. So a couple of weeks ago, I started telling you that stocks were starting to go up for the right reasons, right? not because of Fed stuff, but because of actual improvement in economic data. And so you touched on a couple of things there. Stuff is weird, right? I've just been talking to people, random things breaking, people not following up or getting your calls. I've had some of that weird stuff too. And I'm not sure if that has to do with, Mercury in retrograde or what. That's not really my shtick, that whole astrology thing. But, when I look at the markets, there's definitely been a changing of how people, investors, the market are viewing things, and why things are moving in the directions they're moving, right? So you mentioned NVIDIA being so big. I was telling you that stocks were starting to go up for the right reasons, right? Now, I'm not saying that it's fairly valued or it should or shouldn't go up. What I'm saying is that you could see a couple of weeks ago that this technology space wanted to get bullish, and not just because they were begging for Fed rate cuts, right? Because, like I say, growth was actually there. We talked about the jobs number from it was the end of January or
Sure.
first week of February. Right. And so let's talk about NVIDIA for a second, because those earnings, I mean, they're sort of mind boggling. Right. So a year ago, they did $6 billion in Q4 2022. And then in Q4 2023, which is the earnings we just got, they did $22 billion in sales. And so, I mean, their sales are going from $6 billion a quarter to $22 billion a quarter in a year. It's significant growth. Right. And I'm not going to lie. I took a flyer. I mean, it seemed like everybody was buying NVIDIA this week, right? I bought a couple shares. Listen, I bought them at $660 some. And I went home and had dinner with my family, went to sleep, and I woke up and they were almost $800 a share. I mean, so, I promptly sold and took
Free
my little
dinner.
profit. Right, exactly. Right. We're going to a Boys and Girls Club auction this week. I'm sure I'll give it all back to them. Right. But like I'm starting to buy the stocks too. And why wouldn't you? Right. It was sort of telegraphed that was going to happen. This has been pushing the entire market up. And as I said, I was telling you the past 2 weeks, like, look, these stocks are starting to go back up, right? So it's weird. It doesn't feel right. And yet it is what it is. So back to the weirdness, right? And the bifurcation, we're just throwing it out the window, because before we were at least worried about rates and the consumer and real incomes and wages. And now it's like, fuck that, man. Like the NVIDIA go boom, stocks go boom, right? And we don't care about if you can't own stocks, right? And this sort of takes me back a ways, right? Sometimes I go back and read things I wrote a long time ago, and I just happened to find myself doing that this week. I was reading something I wrote in like 2013 or something about how this wealth disparity was coming, and the only way to get yourself on the right side of it was to own the assets, right? That were going to go up in price. And so, it's sort of like where we're at. You just got to own the assets that are going up in price and not sort of think about why. And it's weird and it's not driven by fundamentals, but that is where we are. And I can't tell you when it's going to break, but I can tell you, and I'm sure you, and then I'll hand it back to you, is like, I mean, look at the gold complex today. We were wondering about, when are these resource stocks going to catch a bid? When's it going to turn around? And I might have an answer for you later in the podcast, but it's certainly not if I can buy liquid NVIDIA stocks and make $100 a share in 8 hours. I mean,
30% over dinner and a good night nap is good work if you can get it. 35% is not bad at all. It was an interesting week. Listen, every morning I write an editorial for Resource Stock Digest, which of course is the sister site to Daily Profit Cycle, which you should go to dailyprofitcycle.com/subscribe. By the way, subscribe and get some of those morning thoughts and editorials from not just myself, but Mr. Hodge, Mr. Stansel, Mr. Carl, Mr. Curl. I'm the host of talented editors and opinions on all things markets, right? But I say that to say I write a morning Resource Stock Digest coffee talk, and it's really, at the end of the day, it's whenever I wake up thinking about the week will look like, what's interesting to me. And so what was interesting to me this past week was I thought we'd have an interesting week in lithium for a couple of reasons. I sensed it was bottoming, right? The Chinese holiday had passed. China was going to get back in the market. I thought the destocking part of the lithium market had largely played itself out, and it felt and looked like a bottom. And I thought China would get back in there and start buying, and so would some of the other major players. So I speculated that, lithium would have an interesting week. And then one of the catalysts was going to be that Gina Reinhardt's 4-month hold where she couldn't bid for the rest of her Australian takeover target was going to be up. And so now she had the liberty to get into the market and actually bid for that other 80%. at a third of what she bid for the original stake. And I thought that would also be a catalyst for the rest of the sector. And while that part didn't happen, Chinese futures limited up, right? I mean, they skyrocketed up. We had a day where all the uranium stocks on the Australian exchange were down and quickly turned around and made a U-turn before the day was out. We had a couple of up days, a couple of flat days, but it definitely feels like a base pattern forming across the sector. That was followed up by Piedmont deciding to sell its share of Sayona Mining shares. And their public statement says Piedmont is strategically positioning for the lithium market recovery we anticipate, bolstering our balance sheet by monetizing non-core assets. So the strategically positioned part of that statement for the lithium market recovery it anticipates was interesting to me because it looks like they absolutely want to go ahead and be cashed up. And again, the biased Patriot Battery Metal shareholder in me says, I want as many majors cashed up as a humanly possible because we have CV9 assays pending. We already know we have great network. We know we have, 109 million tons, probably closer to 150, 160. Now, eventually it's going to be close to 300 or surpassing that when it's all said and done. It'll probably be bought long before that. But then I see Minres sold their stake in Azure as well. And so it's just been such an interesting week in the lithium space. I have to believe that's going to continue. And that's coincided with Patriot bottoming it right, I hope, bottoming it right around the $7 per share level. It's well cashed up. It doesn't need money. I would still love to see one of these companies come in and take a 5 or 10% stake just to further endorse a project that obviously is world-class and when it's all said and done will be unique, especially in North America. And that part's important because Albemarle and BMW just signed a deal where they are going to be partnering to, not only help supply, the future battery metals that are going to be necessary for North American supply chain, but research the technologies and the processes that are going to expedite that. So again, there is a difference between Australian assets, North American assets, and assets in China. I really don't care about the Chinese spot price outside of the fact that I know it moves market sentiment. I think eventually we're going to have a situation where there's going to be a North American price index that's more reflective of a sustainable North American lithium space, independent completely of what goes on in China. And Elon Musk had an interesting quote to that about a month ago. It said, we absolutely need to enforce trade barriers with China. If not, China is going to continue to eat our lunch. And so I'm watching for that. Nothing ever happens as quickly as I think it should, but all of those pieces kind of floating out there in the sphere of the world there, they're interesting to me, and I'm really excited to see them come together. I think it's going to be fun.
Well, look, I've been saying for a while that the second half of 2024 was going to be time to buy commodities, right? It's not that far away. We're almost into the end of the first quarter here, right? We're certainly halfway through it. And I think the China thing, 10 minutes ago, I said that I might have the reason that commodities are going to start to perk up, and it's the China thing, right? It's not just for lithium. So you can see that, yes, their holiday is over, but also the Shanghai Composite, which has been frankly, a bear market for like 3 years or so, is trying to put in a bottom as well. And so if China is going to have its reopening, its turnaround in its stock market and get back to growth, not only is it good for sentiment, which you just said, but it's good for price and it's good for demand. I mean, they're processing, pick your commodity and then pick your percentage, right? I mean, 60, 70, 80% of all copper, rare earths, gallium, yada, 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 right? So there's going to be a lot of buying if the Chinese is back to opening. The other thing I'd say is, I told you in recent weeks that we're likely going to avoid recession in the U.S. as well, not just because of that jobs number, but because we're likely not going to get negative growth this quarter. And so you can't have a recession without negative growth. If it's Goldilocks and it's soft landing and this economic data is turning back around, then that's as good as a reason I can find for commodity prices to go up, right? And copper's sort of sniffing that out, right? So copper's added 20 cents in the past 2 weeks. Closer now to $4 than it has been. And so you can start to see that. And then back to NVIDIA, right? And I'm not the only one that's had this thought. I've, seen it going around in the echo chamber that is the social media networks that we operate in. It's great. NVIDIA, you sold 4 times more chips. Where's the power going to come from for all these data centers and AI devices and things like that, right? Like, we're all going to need whatever, nuclear plants or transmission lines or batteries or whatever. And I've seen this thought start to gain traction in sort of investor circles, right? Like, yeah, the AI is great, but it requires a lot of power. And so I think things are lining up well for, commodities, not just Lithium for the reasons that you said.
Yep. Yeah. No, I couldn't agree more. I'm a huge copper bull in the second half of this year. I've been aggressive in my personal positions and plan to add to those here over the next quarter. We've both been aggressive with Lithium over the past several years, and that didn't stop, by the way, after Patriot. It actually continued well into the past several months with several private deals that are soon to become public. So look, again, I hate to sound like a broken record. I think we're in a really good space in the commodity space. I think gold equities, and I wrote about this in my Resource Stock Digest Coffee Talk or my Daily Profit Cycle editorial, actually, are trading as if gold was at 1,300, and that's just not the case, folks. We're within $40, $50 of brand new all-time highs. Those highs are coming. Check those lists, check them twice, and get positioned now, or you're going to be paying much higher prices here in the second half of the year. And just like you said, that's not very far away, folks. Now, with that being said, I have to laugh because it's frustrated and, I don't want to say spiteful, but, rightfully so. Gold bugs are bored, man. Gold bugs want new all-time highs. And, Newmont's in here trading at 52-week lows, despite the fact that gold is $50 away from an all-time high. And I, if you're a Newmont shareholder, I'm not laughing at you. I understand your pain. It's been a frustrating, go at it, given the performance of the gold price relative to the performance of some of the equities. But with that being said, I think we're kind of at an inflection point for gold. I think we're going to have ourselves a great second half. And I think we're in a raging bull market for uranium. So where I was going with all this is, as frustrated as gold bugs are, I have never seen such an overreaction on social media from anyone in any commodity as I have with the uranium bugs, man. I mean, some of the stuff, like somebody tweeted, uranium down to $99 with an ask of 100. When will it stop? I'm like, it's down $10, motherfucker, from 17-year highs. What are you talking about? When will it stop? And so I bring up the uranium bugs because it's skittish and frustrated as the gold bugs are, me included. We have a great thing going on in the uranium sector, folks. This is just a brief correction.
A gift.
It's a gift. Take a look at the chart, folks. This is as simple as it gets. This one is not hard to laugh at, so I'm going to laugh at it. Y'all need to chill. You uranium bugs need to chill and add on these dips if you missed that last 20-30% run up in the equities, because this is an absolute gift.
It's almost become not a contrarian indicator, but an indicator to buy or to add, right? And then
that's a contrarian indicator.
that happened in December, and it happened, December, January, and it's happening again now. The fundamentals couldn't be stronger. We went over that last week. Demand side, supply side, mass psychology. The charts look great. I mean, maybe some have broken down, but I'm looking at Denison, and the 50-day is still well above the 200-day. Like, not even, it's fine. And the what do I want to say? Yeah, it's sort of it's not the culture. It's the rise of the dopamine driven clicks. Everything's fast and everything's got to be to an extreme, right? Whether it's politics or whatever it is, right? It's either going to the moon or it's, it's a crash, right? It can't just be a 10 to 15% correction inside a bull market, because that's boring and doesn't get clicks, right? And that's really one of the things that actually has been turning me off to Twitter in the recent months. But it's good to check in now and then. So I have added to my Denison position, which is a personal position. Don't have that in the newsletters. Energy Fuels is below the buy under price. I'm looking at other things out there to buy. I think uranium continues to be in a in a bull market, obviously. So don't have a lot to add there, except to say, chill out, look at the fundamentals, and have some couth, I guess, when you are on the social media handles, just out there talking about death and despair when it's really just a healthy correction.
$10 from a 17-year high that it hit 3 weeks ago, and people are acting like it's the end of the world, man. I need to relax and get outside now that it's getting warmer.
Well, and it's, it doesn't help that, for a while it was working and not a lot other stuff was, and now other stuff is working in a big way. The tech stocks, for example, that we just talked about. And I think there's some FOMO, right? Like, I see these big, well, big might not be the right word, but Twitter accounts that have a lot of followers, right? That are always tweeting about uranium, asking, what are your biggest holdings besides uranium, right? Like starting to try to figure out, like, if they're getting out of the trade or whatever. So anyway, I think uranium continues to be bullish and healthy pullback.
Agreed. US dollar broke 104. It's closed, the US dollar index closed at 103.95 as of Thursday, February the 22nd. Firm support at 100. I clearly, right? Minor slight pullback, or do you think this is part of the front running of what the market sees for the second half of the year, which is likely finally some cuts, right? How big the cuts come from the Fed, only the Fed knows, but we're likely not continuing to raise until the end of the year. Is the dollar front running that a bit?
I don't know.
Okay. Thoughts on Bitcoin?
Hold on.
You can pull up the chart.
I'm looking. Yeah. I do it for you. I do give you live charting.
Love it.
I do for you guys for free.
Appreciate it.
You're all right, man. Dollar's still bullish. We'll see what Jerome says next. But if you had to put cash somewhere and you didn't necessarily need the yield, you'd be okay in UUP. It's again, rumors of my death are greatly exaggerated.
Greatly exaggerated. Bitcoin hit 52K.
Bitcoin's bullish. Bitcoin's bullish. Bitcoin's bullish. These ETFs are interesting. I started putting a bid in. I started going through the individual ETFs to see which ones I'd be comfortable owning. Fidelity versus BlackRock iShares versus Van Eck. For what it's worth, Van Eck does have the lowest fee, 0.2 versus 0.25 for the Fidelity and the iShares one. Put a bid in for the Van Eck one because I like the lower fee and I like the ticker HODL. HODL.
That's a good one.
That's a good one. So yeah. I think the other one, I bid, and then there's another one. But anyway, Bitcoin is bullish. Halving is coming here very soon in April, and we're already at the end of February. So a lot to like. I don't know what else to say.
I like it. We were chatting earlier this week about the Albemarle BMW deal. And it's funny because initially when it was announced, it was kind of like a muted response. And then maybe like 2 or 3 hours later, you got to see on the Australian exchange. And this coincided with, the futures limiting up. But you got to see that turnaround that I spoke about earlier on in the lithium stocks. And so Jody DeRouge put and I love Jody's tweets, by the way. Shout out to Jody DeRouge. He's got a great Twitter handle. Insightful and funny as all hell, and he gets political. And, if you're sensitive, probably shouldn't go there, but I'm not very sensitive, so it was great. But he put a, little meme of a rocket ship. And, I responded and I said, it's almost as if somebody connected the dots to the Albemarle BMW release, emailed it to everyone, and then they finally got it. And again, when you get a multi-year agreement for Albemarle to supply BMW with battery-grade lithium for its electric vehicles starting in 2025, and it's a multi-year agreement. They're also going to be working on opportunities to accelerate lithium battery innovation. And you look at Patriot and you look at Albemarle and the partnership and the scale of that project, and you see it coincides with the Quebec government, the Canadian government saying, we are laser focused on expediting a permitting process that we know is frustrating for a lot of y'all. And we're going to put some pen to paper on that. And it starts immediately. And I see the support that the Patriots Corvette project has, across Canada, but definitely locally. this isn't a very hard like puzzle to piece together, folks. It's just a matter of when, not a matter of if. And so again, $7 Patriot shares are an absolute gift. Look, I'm like everyone else. I have tuition bills, I have tax bills, I have things that come up, and you sell when you have to. You if you don't have to, you don't. You shouldn't, in my opinion, be selling. Absolutely take off. What you have to take off. I've done it from 17 all the way down, and just for necessities. Anything I really don't need, I just leave the shares there and still have what I have, and it's still my largest single holding, as I say every week, and a good portion of my stock net worth. And so those are my thoughts on the Albemarle BMW deal. It seems like a logical first step in what I think is going to be a multi-step dance that involves Patriot and Corvette.
I don't have a lot to add there. I was thinking about other things we were talking. I was wondering, it's stupid. You were talking about Jody DeRouge and his Twitter handle and getting political. And I don't know if you saw the Google Gemini AI stuff this week. I'm sure you had to see something about it. How it, wouldn't draw a white person. I was wondering what color it would draw a spodumene crystal.
Oh, God. Looking great. Do we have someone on our staff that can do that for us?
I'm sure we can figure it out.
Get somebody to do it and include it with this episode when it finally gets published.
So bad. The pictures of the gingers were amazing. Did you see the gingers?
I did not see the gingers.
I'll send them to you.
Okay. All right. It's fucking interesting times out there. What else do we want to talk about? I know that you wanted to talk about the high commissions on over-the-counter stocks.
Yeah,
and
so this is just...
I try not to look. No, I was just going to say, I try not to look, so I know this is probably going to piss me off a little bit. But
no, it's not. This is actually a customer service thing. So we have some questions that, so we got Jimmy Mangle now. We haven't talked about him on the podcast. I don't think he's here. He's a former colleague of ours from a past life, and he is what we're calling our customer experience or customer engagement manager, director. Sort of like, not sort of, call customer service for a newsletter company and see sort of like the knowledge level that the person has who picks up the phone, right? In this case, you get to talk to somebody who knows the business, who has been in the business for a while, who has both managed the customer service side and has managed the publication side, and knows a little bit about the market as well. So he's been doing things like putting together videos about our different products, how to use them, how to navigate them, how to get the most out of them, essentially. And he's also been compiling repeat questions and concerns that people have. And one is, and I'm just going to start addressing them here because I don't know how else to do it, right? People call in and say they had what you just said, high commissions on OTC stocks. So they were trying to buy some stock, and whatever broker they were using was going to charge them like a $30 or $50 commission. And they were only buying them 50 or, $100 or a couple $100 worth of the stock. Well, that doesn't make sense, right? You can't do that. You can't buy $100 or $200 worth of stock and get charged a $50 commission. That's never going to work out in the long term. And so there's not much you can do about that except change brokers. Like, this is not something a newsletter can do for you. This is not on my side of the equation. This is on the user side of the equation. There's lots of platforms out there that don't charge commissions. I use Schwab. I have an IRA at Schwab. I have a Roth IRA at Schwab. I have a brokerage account at Schwab. None of those accounts charge me a commission on OTC stocks. You might get a foreign commission if you try to buy it directly on like the TSXV, for example, and you call them up, and you might get charged a $25 commission, but you shouldn't be getting charged commissions on OTC stocks in the modern era. So I would encourage you to seek other platforms, right? Sometimes you got to do a little legwork to get yourself the best accounts and the best commission structure, et cetera, right? And you got to go where capital is treated best. So this is one of the things where it's on you, right, to find the best platform for you that doesn't charge commissions, because in the current climate, that definitely exists. And so basically that was that, high commissions on OTC stocks. And the other thing is, and you'll have some fun with this, we'll have some fun with this, is they say, Nick is covering a stock, and Gerardo's covering a stock, and Nick says sell and Gerardo says buy, or Nick says buy under this price and Gerardo says buy under a different price. I'm confused. And so I don't really understand.
Nick has a blonde wife. I have a blonde wife. They're different blondes. What the fuck?
That's sort of my response to the question. So, but I'm going to try to make an analogy, right? So I'm going to do sports, right? You're watching the pregame NFL today, right? And I don't know. Let's do baseball. The Cubs are getting ready to play the Orioles because you're wearing a Cub shirt. So you're watching the MLB pregame show, and they've got 5 hosts on the desk that are saying, "We're about to go to the first pitch. John, who do you got in this game?" And John says the Cubs, and Joe says the Orioles, and Tim says the other team, right? And they all have a different opinion on how the game is going to be played. It's going to be a low-scoring game. It's going to be a high-scoring game.
Sure.
This team's going to win. That team's going to win. It's the same game they're talking about, right?
Yep.
And everybody's got a different opinion on how it's going to play out and how it's ultimately going to be in the end. And so I've given this feedback, and the customer will say something like, "Yeah, but coming from the same publishing house, it makes it confusing." And I say, "Don't all those analysts work for ESPN? Like, aren't they all in the same program?" So it becomes a matter of, again, back to the user, right? We provide information, we provide tools, we provide research. We don't provide what's the word? We don't provide blanket coverage. We don't have the same
investment advice.
And we don't have the same opinion on everything, right? So parroting, back to the Lincolnshire Wildlife Park, we're not parroting each other, right? We're independent thinkers. And so we like to think that diversity and that breadth of information allows you to form opinions for your own, right? To take that information that we apply, that we give you, and apply that to your own personal situation, because we are not advisors. Obviously, we can't tell you what to do. And we've often said, and I know you say this a lot, don't just subscribe to us, right? Go listen to Lobo Tigre. Go listen to Brian London. Go listen to Gwen, right? Sign up for these other newsletter, right? And I always say truth is somewhere in the middle, right? So you form this amalgamation. And I've even told you this. I know you want to say something. Sorry, but like when I'm making a recipe, right? If it's a new recipe that I've never made, I'll look up like 5 or 10 different recipes, and I'll take like the best attributes of all of them to make the ultimate dish that I'm going to make. And so we're not trying to confuse you. We have different opinions on things, just like everyone has different opinions on things. And so if there is a specific instance, we're happy to say why we have those different opinions. Just write in to Jimmy or call into Jimmy, and then we'll figure that out for you. But that's just the nature of the beast. So different editors have different opinions on things.
Yeah, no, I think you said it perfectly. Look, at the end of the day, Nick and I have different financial needs. We have kids of different ages. We have, we live geographically in an area or in areas that demand different types of resources. Nick's got, I call it a lake. He says it's a pond. We'll call it a pond because it's probably accurate since it's his pond. But, he's got a pond, and he's got his 42 acres, and he's got his chickens, and he's got his duck hunting. And, I don't have a pond. I have other things that, I'm building and that I enjoy. And
you have a river.
It's almost done, Nick. Thank you, Patriot. Right. Yes. And so I'm never going to hear the end of this river thing, but it'll be fun. And when you come down in a couple of months, hopefully it'll be ready. But my point is, all of you have different financial needs. All of you have different timelines. It would be unwise and not prudent of us to offer one blanket set of advice and say, this is what should happen. Now, we could tell you how we think things will go, and Nick and I may see it different. At the end of the day, like Nick said, it really is up to you folks to take accountability after processing and digesting all that information, combining it with your personal situation, your personal needs, your timelines, your risk tolerance, and then making a decision about what you're willing to risk in exchange for the type of return that you're seeking. And ultimately, again, I say this a lot, the gains are all yours. The losses are all yours. We're going to have good ideas. We're going to have bad ideas that just don't work out. It is the nature of the beast. For every Patriot that was up 10,000% and now is only a 4,000 or 5,000% from when, we first wrote a check, there's a Magna Gold that was up some 200%. I thought was going to be 500% win, which missed on, 7,000 ounces of their geologic model, had high debt rates, and couldn't service the debt, and ultimately, went to zero. It's the game. It's the nature of the beast. And you have to know that, that's kind of what comes with it. So hopefully that provides some guidance on why we offer different thoughts and different opinions and have different outlooks and different timelines, because we're different people, folks. That's just kind of the way it goes. So hopefully that helps. Hopefully that answers some questions. I know you had a couple more, Nick.
2 more things, just picking up on what you said. it's real is one of the reasons that it's different, is because it's real. We're not playing with toothpicks, as we've talked about on previous things. We're not paper trading. Like, what we're doing is it's real. I mean, it's our livelihood, right? Like, yeah, tuition was due for 3 kids for spring just this week, right? And so it's real is the one thing. So if you see editors who are blindly bullish or who are never selling, or the stock is always buy rated, it's because they don't own it, man. Like, they're and so if that's what you're into, that's fine, but that's not what we do. So that's one thing. And then the other thing is about like integrity and transparency. So like, I might be in a stock and have been covering it for a while, and I might need to sell some of that stock for a reason that you mentioned, any reason, right?
Sure.
But I still think the stock is bullish, and I still think the stock has merit, and I still think the stock is worth owning. And this is just one-off example. I will say I'm going to sell some of this stock because I need to do this, but that might not be the case for you, and I still think the stock is bullish. So anyway, we try to be transparent and clear about when and why we do things. And again, if you have questions, we are all ears, and we get back to you very quickly. And Jimmy will pick up the phone for sure.
Hey, and look, kudos and a shout out to Jimmy. I think he's the most knowledgeable customer service manager out there, specifically because of what Nick cited. He's written newsletters. He's seen that side of the business. He's made recommendations. He's had gains. He's taken losses. He knows exactly what that process is, what it looks like, and what it is to have subscriber questions to deal with. And so we're in great hands. We're lucky to have Jimmy. We have an amazing staff behind the scenes that makes us look a whole heck of a lot smarter, at least myself, than I am. And so hopefully we're able to continue to bring that to you for many, many, many years. And thank all of you out there that opine and subscribe. And, even if you don't subscribe to the paid service at digestpublishing.com, just go to dailyprofitcycle.com, go to resource.digest.com. Tons of free content there to hopefully further your due diligence process. And like Nick said, don't just subscribe to our stuff. There's a lot of good information out there. Joe Mazumdar, right? Of Exploration Insights. Got to mention Joe every time. As straight a shooter and knowledgeable guy as you'll get in the business. Has his own skill set, has his own approach. And so, yeah, spread it out. Spread it out among several newsletter writers. If you're playing with $100,000 or $1 million or $500,000 or $5 million, it's not the worst thing in the world to spend $10,000 a year on newsletters and compare opinions and thoughts. And if you have any questions about any of the thoughts and the opinions, send them on in. We're happy to answer them, always.
That's it. What
are you watching this week, Nick?
What am I watching this week? I'm watching oil, Gerardo, because all the things, not all the things, but some of the things we said in this podcast, commodities getting back bullish. Oil is the biggest commodity there is, right? It sort of not dictates, but can be a good indicator of where things are going in the economy. And it's looking like it wants to get bullish again. So watching for that, but also because I haven't owned oil in some time, and it could be time to do so again. I'm sure I'm watching other things, but that's it off the top of my head. What about you?
Same thing I was watching last week. I'm looking for results from CB9 out of Corvette and Patriot. I'm watching the lithium space like a hawk to see if my thoughts on it being a bottom are accurate, because if that's the case, the timing couldn't be better for a lot of the private deals that are still private, that are soon to come public. And obviously, again, the public deals that we've done well on, but have, traced back and fallen 60% from all-time highs after going up some 10,000%, which you can do that every couple of years. You're going to be all right. But definitely watching the lithium space. I think the positioning behind the scenes that I mentioned earlier between a lot of the majors is pretty telling as to what's to come. And so, yeah, we'll see. I think M&A is going to start picking up. There's a lot of billionaire investors out there calling a bottom, and you got a lot of companies on earnings calls saying that they're getting a lot more attention and traction on negotiations as far as supply goes. So should be an interesting rest of the month going into March. I'm excited for it.
Yeah, but lots of things going on in the market, lots of things to watch.
That's it.
We'll be here every day sending out the alerts.
Let's see how weird it gets, folks. I think we're in for a weird rest of the month and a weird rest of the year, and I hope there's as much good in that weird at the very least as some of the challenging weird, because I sense we're going to get a pretty big batch of both sides of the weirdness.
We'll be here narrating it.
That's it. All right, y'all. This was, holy smokes, the 258th episode of Investing in Bizarro World. I am Gerardo Del Real, along with Mr. Nick Hodge. I hope you all have a phenomenal week. Keep the comments coming in. Keep writing in. We appreciate all of you that make all of this possible. Take care of each other and have a great week, everyone. Say something nice to the people, Nick.
Something nice to the people, Nick. Have a good week, yo.
Hey there, you independent-minded investor. If you like this video, make sure to tell us so by clicking the like button below. Subscribe to our channel so you never miss another one. And share it with everyone you know on social media. You can also click the link in the description below to check out more information-packed videos just like this one. Thanks for watching.